This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. You are listening to Daily Market Wisdom with Master Trader Nick Santiago. I'm Kerry Lutz. Today is April 24th, and this is show number 20. So, Nick, it's been a month now. You've been imparting your wisdom daily, and hopefully you've made some profitable trades out there. There's definitely been a few that Nick has sent out your way. Where's the market right now, Nick? Where are we as a country? What's going on here?
Well, right now, Kerry, we seem to just really be in what we call a consolidation phase. So if anybody, and I always refer to the charts, but if anybody wants to go look at a chart of, say, the S&P 500 or even the SPY, which is an ETF that represents the S&P 500, what they'll notice is that we've really been going sideways here. And I'm going to say since probably April 10th, April 9th, we've actually just gone sideways. We've had some up moves, some down moves. But for the most part, we're consolidating a range called the 50% retrace level. And that's a level, if you take the high from the month of February, which was February 19th, to the low in the S&P 500, which happened on March 23rd, we've retraced those losses 50%. And we're sitting right around that 280 level right now, and we're really just going sideways. And anytime a chart does that, it's ultimately looking to go higher. It doesn't mean it can't fail, doesn't mean it can't go lower, but the pattern that's out there right now is what we call a digestion phase. You've digested the gains that you've had recently, and if you build a long enough base, you usually will resume that move up again. So far, so good for the markets. This may take some more time here. I think the markets are kind of on pause at the moment as you have a lot of different states starting to open up their economies. So I think people are kind of in a wait-and-see type mode, especially after the big advance that we've had off the March lows in the market.
Yeah, so, and that pretty much scared everybody and made the consensus believe that we're in a bear market and we're heading towards the next Great Depression. And
well, it's understandable, though, too, because you do have Great Depression type unemployment coming in, right? So yesterday we had the weekly claims number was another 4.2 million people filed, but we've never seen economic stimulus or money printing, I should say, by the central bankers like we've seen before, and it's been implemented immediately. And that has also been one of the reasons why the markets have rebounded the way they have.
yeah, but liquidity itself, is that enough to just keep the market going higher? Is the argument that the market is completely divorced from the real world, is that true?
It's not true. It can be true temporarily, but it's not true longer term. So and just looking at crude oil, that tells you it, right? So I mean, look what happened with crude oil earlier this week, where the May contract went negative. So we have to take into account that yes, this $2 trillion that's been printed by the central bankers, these stimulus plans that have been created by the government, yeah, they're helpful in the short run, but in the longer term, that money runs out quick. So you got to get these economies, you got to get this country back up and running pretty soon.
Yeah, totally understand. And so country's got to get back up and running, and Georgia really is the test case. There was a study done that was quoted by Tucker Carlson several times on his show. Not that I'm watching it all that much because I just can't stand watching the news because it's all COVID-19 all the time and they have nothing to add to it. But this study tested the mortality rates in states that hadn't locked down, like Arkansas, South Dakota, I think North Dakota, where they just refused because there weren't that many cases and it wasn't that big a deal. And what they found was in those states when they normalized for population density, for how spread out it was, their mortality rates were no higher than the states that had locked down, which, if this is true, Nick, this is really, that should make everybody's blood boil that we were put through all of this for no reason. And that's not to say that, we always have to say, well, this thing is, it's not to say that it's not a big deal, that it's people aren't dying and all that, but they're not dying anymore as these latest random samplings in LA, New York, and other states have shown that the infection rate is many times higher than the numbers that you see in the New York Times, where you could see 2.5% to 5% of the population actually be infected, which is way, way higher than they said, which means that the mortality rate is slightly above a normal flu season.
I agree with that. In fact, I was just watching something from a doctor from Sweden, from Norway. Norway did a complete lockdown, and those two countries, Scandinavian countries, are right next to each other, somewhat similar in size. Norway did a complete lockdown. Sweden did not, and the mortality rate was the same. So that's pretty incredible right there in and of itself. Like you said, we're not making light of the virus or anything like that. But I mean, at this stage of the game, we have to start to make an effort to get these economies up and running. I just think that if you don't, then you're headed down to you're headed for bigger problems going forward.
Yeah, because at some point these small businesses will collapse and won't reopen. And even some of the bigger ones, look, you got department stores chaptering out. Neiman Marcus is going bankrupt. J.C. Penney has missed an interest payment. A lot of companies have missed interest payments and are in technical default now. So, and actual default for that matter. So something's got to give here, and we can't just keep doing it the way we've been doing it because it really hasn't stopped the spread anyway.
Yeah, and just to go back to some of those retailers that you mentioned, companies like J.C. Penney, they're on the verge of bankruptcy anyway.
Yes.
So, this might have just expedited the process, to be honest. And I hate to sound, cruel like that because, hey, they employ a lot of people. I want to see them be successful. But the truth of the matter is, they have really struggled. I follow the stock, not that I even trade it, but again, it's been it's been under $1 for quite a while now. So it's not like they just started to have problems. They've been having problems for years now, and a lot of people don't realize that. But when you look at it on the flip side, there's a lot of businesses that are actually doing well out here. The Walmarts of the world are gaining market share. Target's gaining market share. You look at, obviously Amazon, that's been one of the biggest winners. Netflix has been a big winner with this. And then you're getting, a lot of companies that are doing well, but the reality of it is small business. And that's where it really hits home because that's really the meat and potatoes of this country. And if the barbershop can't open, if the nail salon can't open, and all of these smaller places can't go about their business, that's really where it hurts somebody. And ultimately, states can't afford this unemployment benefits. It's just, we're talking about states now filing for bankruptcy. We don't want to see this stuff. I mean, this can be all avoided. Just get this thing up and running, and you'll see how things will improve.
Yeah, and there's some nasty things going on about the people running the pandemic response, about their potential corruption. Maybe I'll just throw a link into the show notes here so you can take a look at it. But, this is just, it's got to end here because it isn't really helping. And life is risky. You cross the street, you might get run over by a car. But that doesn't stop us from crossing the street. And the idea of the shutdown actually doing any good, yeah, maybe on the margins it did. But it's a lot easier to go and secure the people in the nursing facilities where roughly half the deaths in New York, in long-term care and nursing homes, 40% of the deaths in New York and New Jersey took place. 40%.
Yeah, it's an astronomical number when you think about it.
Yeah.
How those places were not secured. it's sad and it's baffling to me at the same time. But they knew that the elderly were most vulnerable just
from the
from what
get-go.
happened in Washington State at the very start of it. So,
Absolutely.
I really I shake my head at that sometimes.
Right. So, hey, so we've got the second phase of the stimulus coming, another 300 billion. In addition, Florida's our home state's Senator Marco Rubio. Evidently, he got my email, Nick, because he's starting an investigation into the banks as far as favoritism on the stimulus loans go.
Oh, there you go.
Hey,
There you go. That's
and I have the goods. I mean, there's one bank, medium, large size bank. I got their emails. Their one is they're saying we're working hard to get the portal up for the PPP loan. And then on the other hand, they're saying, send your stuff here. They have a back channel for their larger clients, right?
it's kind of the way things have always worked, right? So,
I know.
it's unbelievable sometimes, but that's kind of the way that's kind of the way things work, I guess. Yesterday, in fact, I was watching CNBC. Willie Deagle, who's the CEO of Uncle Jack's Meat House,
Mm-hmm.
and they have a Georgia location, and they were talking about all these different things they're going to do to try to open up. And then at the end of the interview, he basically said what a hard time it was for him to get any of that stimulus money for his business. So, again, you have to shake your head at some of this stuff, but I think there was a real genuine effort made to get this out quickly.
Yes.
And maybe that's where the problems lie sometimes when you get these things out too fast. People always find a way to take advantage of it.
Yeah, well, they're going to take advantage no matter what. And I hope the big banks pay the price here. I think there's some class actions in the offing, and they deserve to be held accountable for this,
Yeah, and we've seen it before, and
Yes.
there's no doubt we're going to see it again.
Yep.
So,
Yep. Well, the question is, will this jumpstart the country? Supposedly 1.8 million businesses got the first go round of PPP. Now maybe another million and a half will get it. But there's 40 million small businesses and sole proprietorships out there. And,
yeah, and they're
need
the
a lot
guys
of
that
help.
really need it. So, I mean, I really hope that, it took Congress a little while to act on this. I mean, the total bill is $484 billion.
Yeah,
Just think of these numbers. They're just massive.
madness.
And again, the sad part is, there's probably somebody that needed that money this week and didn't get it and had to close their doors.
Yes, no doubt. No doubt great injustices were done, but hopefully it's going to do some good there. So earnings are continuing to come in. What's the story there?
Yeah, so we're really in the start of earnings season right now, even though it officially kicked off last week with the big banks like JP Morgan and Goldman and Bank of America. But now we're getting earnings from companies like Intel. We're going to start to see big cap tech next week with the Amazons and the Apples of the world. So it's going to be very important to see the reactions from these stocks because nobody's really going to have great reports. Maybe Amazon will have a dynamite report, but the stock has already run up into the news. So it's going to be important to see the reaction. Last night, Intel reported after the close, and today that stock's down $1.37. It had a nice little run also into mid-April. So that's holding up well. That's encouraging to see. And surprisingly, so far, I think most companies have hung in there pretty well after their earnings report. So that's good to see, and we'll see how this builds. But I don't think traders need to necessarily pay attention to the reports. I think they need to pay attention to the reaction in the stock after the reports are announced.
Yeah, yep, agreed, and because the market already knows that the lousy earnings were coming, and how badly they get hit, I guess, is a measure of the confidence in the market. So, a couple of positions we're in. USO still trading low, hasn't come back yet. They've restructured supposedly. Is that one going to survive, you think?
I think it's going to survive. They've restructured and they're more like a closed-end fund now. They're going to probably, from what I read, they're going to put money into like maybe into stocks like Exxon and Chevron. They're going to be more diversified. So this will struggle a little bit. But I will say this much: oil has had quite a rebound. Now today it's not doing much; it's flat. But if you get this economy going, you'll see how fast oil will start to move up. So anytime you get these events like we saw earlier this week where you had that May contract expire and actually the day before actually go negative by 30 plus 40 points, I've never seen that happen in my life. But if this market starts to, the economy start to pick up, you're going to see people starting to use fuel. And if they just start to listen to us, Kerry, and, you get some testing going on at the airports, people will start to get on planes. So again, things can change rapidly. But right now, USO is kind of dead in the water, sitting at around $2.56. I think they are going to do a reverse split. That does not affect anything. It just affects the price of the equity. Right. So it looks more attractive at a higher price, but it doesn't change the market cap or anything like that. And so they're going to do that, and they're restructuring. I don't think the restructuring has been finalized. But once it does, and if oil gets going again, but like I said, if you're going to trade something like that, you got to do it the way I did it, which is own call options. Give yourself out till October or further. I have the October 5 strike on the option there. We'll see how it does.
All right. Well, hey, that's good news there. So what about? We also wanted to give a shout out to one of our community members there. We're talking about Jim Kramer, because obviously he's been listening to the show because he mentioned what he re-quoted you, of course, without attribution, about cleaning up planes isn't enough. They need to be giving COVID-19 tests before you get on the plane. So Jim, thanks for following us, and please tell your friends out there, like, share, and subscribe us, and we'll be doing well.
Yeah, the more they could spread the word, the better off we all will be. So no harm, no foul. And again, I think they got it right from us because we've been saying it for a little bit now.
This is weeks we're going on here. We've been saying this, and it's a little bit out of the box thinking here is kind of what's necessary, and that isn't just for the business leaders. That's for our politicians and these people in the medical establishment. Look, what they've been doing, killing the hydroxychloroquine with negative stories, the VA test, where they said that it not only didn't work, it killed people. Well, they were using it in the VA without the other drugs involved. For people who were far gone, the tests were really not comparable. And we've got major studies around the world. They're anecdotal because they didn't do double blinds, because if you have people who are dying, you can't just, if you have the chance of curing them, of restoring their health, you can't just give them a placebo and say, oh, well, he died, he helped the study, And so, of course, it's going to be anecdotal.
Yeah, it's terrible. Even yesterday, the market sunk right around 12:30 in the afternoon, and it really rolled over. And it was on news that came out of a WHO report that was a study in China with a Gilead's drug called remdesivir, and they said that that the headline was it's a complete flop, and the market, the algorithms caught wind of that, and the markets just absolutely plunged lower on the back of that news. And then we come to find out it was a study that was canceled. They didn't have enough people. There's 9,000 problems wrong with the study. Gilead completely came out and said, this is not true. We're going to have a study coming out at the end of the month that's going to be, totally different. This was an incomplete study. It was never even completed. They didn't even have enough people for it, and it was completely canceled. But the WHO leaked it out there. Financial Times caught wind of it. They posted it out there as a complete flop. And next thing you know, the stock market plunged from its highs yesterday, gave up all of its gains. And then you had, Gilead stock, which is a stock that's been doing pretty well. And you could see that it plunged as well on the news. Today, Gilead's around $76. Yesterday it was as high as $84. So, it's quite something that we're seeing all of this news out there like that. I'm not trying to be a conspiracy theorist or nothing like that, but I have to say it's quite remarkable how any effective treatment, and I've seen it from multiple doctors that I've spoken to personally, say some of these things actually help, and they're just getting shot down like that and creating more fear. It's terrible.
Yeah. I mean, this hydroxychloroquine study was very, very flawed. And the French doctor, who's a major epidemiologist, virologist, he basically ripped it to shreds. And, they gave it to them too late. And, some of them got a combination. Others received just standard supportive management. And, it's just, if you give it too late, it's probably not going to help, especially with elderly people, which veterans often are. Well, Nick, we're just going to have to see what happens. Hopefully the world will come to its senses. Hopefully Donald Trump will say no mas and push this thing forward and say, all right, it's time to get back to life. And then we'll see what happens. After that, obviously the effects are going to be out there for quite a while, because you can't just shut down an economy, $24-25 billion economy, and shut it off literally for 6 weeks. I mean, 6 weeks where you shut off 80% of it and not expect there to be ramifications. Maybe some of the companies would have gone out of business anyway, but others would have lingered and stayed around for years, perhaps, and maybe never died. So, Nick, I guess we'll see what happens next. Anyways, if you heard something that really sparked you here and you got an opinion, we want to hear about it. Email us, kl@kerrylutz.com, kl@kerrylutz.com, particularly what you think the effect of earnings seasons is going to be on the market and where you think the market's headed. And for more information, just go over to Nick's site, inthemoneystocks.com. That's inthemoneystocks.com. Check out Nick's record, and there's a lot of material there to help further your trading instincts and abilities. And the Twitter feed is ITMS, @ITMS. And Nick, we will talk to you on Monday.
Thank you, Kerry. Have a wonderful weekend.
You too.